Welcome back to the channel, and today we're going to be talking about the massive reforms that are going to be happening in the UK from the 6th of April 2025 regarding status and taxation. Now, if we roll back to the autumn budget 2024, for once, some of my clients have been significantly benefited by the tax changes that are happening in the UK. So let's break it down. As we all know, the 5th of April every year is when the tax year ends, and the 6th of April the new tax year begins. The 6th of April 2025 should be a celebration day out there for any of my clients or prospective clients who have already been a long-term resident outside of the UK. And by long-term resident, I mean having lived and resided beyond the UK for 10 years. Currently now, at the time of recording, and up until the 5th of April 2025, your tax residency status for inheritance tax planning was and is based on domicility. From the 6th of April 2025, though, the government are getting rid of that. And in their own words here, when we read their technical note, reforming the taxation of non-UK domiciled individuals, they go out with the following wording. The government is committed to addressing unfairness in the tax system so that anyone who is a long-term resident in the UK pays their taxes here. The government will therefore remove the outdated concept of domicile status from the tax system and implement a new residence-based regime which is internationally competitive and focused on attracting the best talent and investment to the UK. The document's 126 pages long. I won't bore you with the rest of it, but effectively what it means is they are stopping people who live in the UK. If you have a house in Mayfair and you spend 9 months a year in the UK, you're paying your tax in the UK. Forget this idea of in a non-dom, which is really what the UK should be doing. That is 90% of people they're able to get more tax from. The 10% or whatever it is of people who you maybe have lived in the UK, but maybe you've lived in Dubai for 10 years or you've lived in America for 20 years, whatever it is. If you've been outside of the UK for 10 years or more, you will no longer be deemed UK resident for inheritance tax from the 6th of April 2025. So at the time of the recording, you're not far off that. As long as you don't pop your clogs between now and then, your beneficiaries and obviously your estate won't form part of UK inheritance. Now, this is extremely important planning. So many of my clients who are currently living abroad, they've got young children or their kids are getting older, they're thinking about university. This is starting to affect people's planning. I've got one couple, they live in Dubai, they're twins, they're sending them to university, and they're suddenly thinking, if we were to send them to the UK, they may end up then getting jobs in the UK, and we may want to then go back and retire in the UK. That could obviously cost them a massive inheritance tax bill because they will become UK residents again. They've been living in Dubai for a number of years, more than 10. So technically from the 6th of April, they would vanquish their ghost domicility because it will only be UK residents based. So it's a really important factor. And a lot of our clients who have now been beyond the UK were always umming and ahhing with the idea of going back to the UK. For many of them, this has now made it categoric. They would rather go live in France or rather go live in Europe or rather stay in the Middle East or America, wherever it is, and not step foot from a tax perspective back in the UK. Otherwise, they undo the last 10 years or more that they've been residing outside of the UK. If you want to have a conversation with myself or one of our advisors here at Cameron James, we are not authorised and regulated tax advisors, but what we can do is read the information that's happening online. It's not rocket science to read through this stuff and understand it. If you ever want to have a formal tax advice opinion, we can provide that for you with a third-party tax specialist, but we are here to help you focus on the financial planning side of things and work out in layman terms, when we're using our cash flow modelling, if you're a UK resident or a non-UK resident, how this would affect your inheritance tax bill upon you passing. We can then go backwards from there and work out, okay, how much money do you have and what are you going to spend? Now, conversely, some clients saying to me, Dominic, I understand the new rules, but I want to go back to the UK for my family, for my parents, for my health, for the NHS, for my grandchildren, or I like walking in Dorset. I always wanted to retire in Dorset. Whatever it is, that's fine. Live your life how you want to live it. Don't live your life around tax. I can tell you now, because I've met some very sad individuals in my days who have been very tax efficient but haven't always done what they've wanted in their life. If you want to go back to the UK, no problem. You will obviously become UK tax resident again for things such as inheritance tax, but we can help you plan and build around that. You can take out insurance policies, term or whole of life, to protect yourself in the event of something happening and the beneficiaries being able to have your money. We can also help you work down gifting strategies to pass money on to your kids, family, beneficiaries, whatever it might be, or just simply spending more. By spending more in retirement, you'll have less for the government to take a slice from. So whether you want to stay in the UK or remain abroad or go back to the UK, here at Cameron James, we're well placed to help you make those decisions. And again, by getting in touch, you do not become a client. By even having an advice report from us, you do not become a client. You have to sign numerous rounds of paperwork and DocuSigns before you get anywhere remotely close to being onboarded and being a paying client of ours. So as always, take care with UK Pension Assets.